Hey, so this is another update of my Canadian dividend investing portfolio. So what I do is I'm using Wealthsimple Trade to buy Canadian dividend paying stocks, mostly utilities, real estate, some financials, and a few other sectors. And I'm tracking everything in this custom Google Sheet that I made. And yeah, just kind of reporting back every week or so with the progress. And I started in September. And now here in May, you can see that I've picked up quite a few dividends along the way and made some decent gains on the whole account. So basically my stock value is sitting around $16,450. I've received 194 dividends, and actually I need to add one in here because if we look in Wealthsimple Trade at all of the dividends that come in, you can see there's one here just from May 7th, so that was 240 from REI, and what I do is I just put these in the spreadsheet as I get them in the dividends tab. So I'll just drop down here and I'll just type this in. So we had TSC REI.UN, that was on May 7th, 2021. And these guys paid $2.40 in Canadian currency. So when we look at the summary page, now you can see this has been incremented, and this is basically how the sheet works. I just track notifications as they come from Wealthsimple Trade, and yeah, and it displays here in a little bit nicer way. So basically, the whole account is up a total of $1,900, which is about a gain of almost 13%. We can see here the yield of the entire portfolio is 3.92%, and I'm going to try to push that up today with a few more buys. And yeah, when we look here at the total gain, 197 of this is actually coming from the dividends themselves, and the rest is coming from the appreciation in the stock price because everything has been doing pretty well since I started back in September of 2020. If you did watch the last video, you would have seen that my projected kind of dividend annual income was around $670, and that's because there was a little bit of an issue. I typed in something wrong, and I was surprised as to why it was so high, and it turns out it was a manual error on my behalf. But the real annual income estimated based on the forward annual dividends right now is actually $645. So as always, my biggest sector is utilities, and I'm trying to get away from that, mostly putting money into real estate these days because I still think that's the biggest area for recovery. But when we come take a look here in the portfolio, we can see here I have it organized for my percent of holding in decreasing order. So my biggest positions are up here at the top, and we're seeing some massive drops. We have minus 10% in Northland Power, minus 9% here in Intergex, and then like a lot of these utility companies, Boralex is down almost 6%. Brookfield is down almost 5%, and even Algonquin Power is down almost, well, just over 4% as well. But because they are basically all of the utility companies making up the biggest portion of my pie anyways, I think I'm just going to wait, because also when I look at the spark lines, for example, of Northland Power, this one is down 10% right now for me, so that means I bought in somewhere, average price up here. This is amazing. I do like to buy in the red days, but I'm going to hold off, I think, because this is already one of my biggest positions. And I'm going to be back again later in the week buying a little bit more. And I think just in case it falls a little bit more, I'm just going to wait. And I might be picking this up if it falls another percent or so. Because I think that this is like, even if we look here at the lifetime, let's see if we can get that. We are sitting at like an extremely high, value compared to its lifetime, and a lot of the utility, like renewable energy companies, are sitting up here. So I don't really think that this is like the sustainable kind of price that it's going to go forwards. Again, that's my own opinion, definitely not a financial advisor. But yeah, I get the feeling it's going to keep dropping a little bit more and level out somewhere else. So yeah, I think I'm going to hold off on that. Let's set this back to 5 years. And again, when we take a look at some of the real estate companies instead, for example, REI.UN, they had like a pretty level thing going on here, and they're climbing up. All of them are basically exhibiting this tendency. If you watched my last few videos, I've just been putting in money into real estate. Pretty much that's it for the last few weeks, and I'm just going to continue that as well here. You can see here, even with smart centers, they're pretty much caught up to where they were before all of this nastiness happened, and I'm kind of thinking that a lot of the REITs are basically going to head that same way. These guys as well. They have a long way to go still. So I get the feeling that like putting money into REITs right now, if they do end up recovering, which is like quite possible with all of the vaccines and everything that's going out, that this difference in spread kind of getting back up to the September or whatever that was, March values of last year, is going to be like a much bigger gain than just jumping on that like 10% of Northland Power, hoping it recovers, back up to this like crazy inflated expensive price that it's never seen before. So that's kind of the mindset that I'm going with. Again, it's my own opinion. You can form your own opinion and make your own decisions. But I just like sharing what I'm kind of doing and what's going through my head in a very unprofessional manner. So let's go into Wealthsimple Trade, and let's go into the portfolio here and buy some stocks. So first of all, let's pick up some smart centers. These guys, I just want to buy one because, like I said, they're pretty much caught up to where they were, but they have a really high dividend yield, and I'm pretty happy with that, 6.3%. So with these guys, I'm just going to take one at a market buy. I'm quite happy to take a 6% yield on basically anything. And then also looking here at REI.UN. Nope, not that one. Who is this? US. I've never heard of these guys before. No yield. Let's go REI.UN. Gotta be careful when you type these things in. With these guys, again, love these guys. I'm also waiting for them to bring back their yield. They slashed it already. I don't know if they ever brought it back. I'm not following them super closely, but let's take two of them. So that's going to be about, let's take three. Yeah, let's go with three. It's going to be about $63, and we're going to place that order. Sweet. The next one, I'm going to pick up some Allied Properties. These guys are great. AP.UN. Hopefully we can get back up there one day, but you never know. At least we're kind of caught up to where they were about 2.5 years ago. So with these guys, they're a bit more expensive, but I'm going to take two. Got a good feeling about these ones. I take those on a market buy. And then HR.UN as well, another real estate guy. These guys are just climbing back up again. And they're a bit cheaper, so I'm going to take four. I think I can get. That should be good. And I have a little bit left. I've got $32, and I was just thinking that my sector pie here is just getting like out of control with utilities and like also real estate. So I want to put at least one stock into something else, I think. And I was just looking in telecommunications and at Telus actually. And these guys have just like great growth potential in their stock price and also their dividend. And I thought, you know what, why not? I'm only up, where am I? Personally, I'm just up 5%, so it's not like they're at like a crazy high peak compared to what I'm used to, and they got a little tiny little dip going on here as well, compared to their high in the last year. So I've got enough for one, I think. So let's just go and take that, and I'm happy with placing that. Okay, cool. So let's jump back into the Google Sheet and go log each of these transactions that I just made. So I'm just going to come down here at the bottom and just drop in the actual price, like the market price that I paid because I was using market buys, and just make sure that that compares with the notifications that I get in Wealthsimple Trade. And once that's all in correctly, I just come back to the summary page and just check to see what has changed. And basically we're looking here, before the estimated annual dividend income was $645, and now we're up to $657. So it's an increase of about $13, which is great because that puts me up to, this amount of passive income every year tax-free, which is really nice to have. I could use this if I want at about $54, $55 per month, but what I'm doing is I'm just always reinvesting this back in as the dividends slowly roll in, just like lumping that in with my deposits and getting that snowball effect or compounding effect to continue growing the portfolio faster. And you can also see here, if you were paying attention, the average yield before was 3.92%, and they've bumped it up to 3.93%. I would really like to get this over 4%. That's just a personal target of mine. Everyone has different goals, depending on how growth-oriented they are or yield-oriented. But I think 4% is just a nice kind of safety net for me personally, and I'd like to get there eventually. So anyways, guys, thanks for watching. Hope you enjoyed the video. If you do, drop a like on it, and leave a comment down below if you like these videos, or with what stocks you're buying this week or something. Cool. I'll talk to you in the next one or down in the comments.